the recording now. As always, the disclaimer, okay? So trading in the financial markets is speculative. It involves risk of loss. This presentation is for educational purposes only. I'm not your financial investor. I don't know your financial situation, and I'm not recommending that you take any specific trades. I may be demonstrating in my sim account the setups I look for and doing some demonstration trades, but again, I don't know your situation, and I'm not recommending that you take any trades. All right, got that out of the way. So let's look, I got this website here, if I can get to it. This is the CNN Money kind of map of the Asian markets. And look at this. Shanghai Composite was down over 7% yesterday. And it was down, I guess the circuit breakers got hit and they stopped trading in China after they dropped a certain amount. The Nikkei down 2.33%, the Hang Seng in Hong Kong down over 3%. Germany closes in about 3 hours, down 3.5%. UK down 2.85. So this kind of China fever is bleeding all over the world. And if you when we get to the U.S. market here in just a minute, you're going to see that it's bleeding over, and we're looking at a down market as well, down open. Okay, so let me get back. Good morning, Michael. Michael Getzendammer. Donner. Wow. Don't see that name very often. Okay, so you can see here we are on the ES, the S&P 500 futures contract. I've got it on a 15-minute chart so that we can see really, right about here on my chart is when the Asian market started heading down, and you can see we've come, a series of lower lows, lower highs, a really clear, strong downtrend. The S&P futures, before we open here, are down 38.75 or nearly 2%. So, we'll expect it to open down. Isn't it funny how gold is nearly a mirror of that? That as the S&P futures market came down, gold headed up. Now it's up only about 1%, so proportionally not the same. But at the same time that the overseas market started heading down and our futures started heading down, about 1800 last night, 6 o'clock, gold headed up. And that's really what we expect. For the most part, gold moves opposite the stock market. And if you've been watching my newsletters, my updates, I think I'm bearish on the market, and on the broad indexes, I think the bear market has started, and I think we're going to see some opportunities to be going long on gold mining stocks and stuff in the near future. So again, there's a pretty strong reverse correlation between equities and gold. Not perfect, but a pretty strong correlation. Once we get a little bit closer to the open, in about 10 minutes, I'm going to switch over to a 2-minute chart. Again, this is a 15-minute chart, just so we have a sense of the broad trend. Now you can see, get my handy-dandy pen out, right? We've had this, lower lows, lower highs, lower lows, lower highs. That's the definition of a downtrend. Now we're pulling up. And when we have a downtrend, some kind of retracement is expected at some point. We don't know when it's going to be, but we typically, once it finds the bottom, from here at the open, it could, start this retracement in earnest. That's one scenario. The other scenario is that this continues down like that. And so price will show us. We just have to wait and see what it's going to do and then base our trades on that. But at some point, once the bottom is put in for this downtrend, we'll get some kind of a retracement. Let me get the right cursor going here. Here we go. So say that is the bottom and the retracement is started. Again, we don't know that for sure. And we're going to get some kind of retracement up into this Fibonacci zone, and then it you know, the high probability is it would head down again. So we'll just watch that and see, base our trades on that. Same thing for gold. At some point when this uptrend is over, and it highly likely that it'll correlate to the S&P futures here, that this thing will correct down. Right. That's interesting. Did it correct down from there? Nope, didn't go enough. So at some point this is going to correct down once the top is put in, down into a Fibonacci retracement zone, and then highly likely that it'll head back up. So that's what it looks like on this 15-minute chart right now. So it's about 10 after, so I'm going to switch over here in just a second to a 2-minute chart and just watch it play out on a little bit shorter time frame. In fact, before I do that, let's go look real quick. Let's look at the broader market. We got time. I want to look at the Dow. I mentioned that I'm bearish. I have been. So here's the Dow, and I had in my newsletter. If you don't subscribe to my newsletter, I'll type it in here in the chat window. See if you can locate the chat window. There. I just put in a link to my homepage. Right on my homepage is a place you can sign up for my free newsletter, and I just offer commentary on, you know, the broad market, on oil, on gold. You're welcome to sign up. So I think the broad markets, I think the bear market started again. Here's the sequence. You know, we've been in a 6-year bull market. If I switch this real quick to weekly. All right, we've been in a 6-year bull market, and at some point a correction is going to be normal and healthy and completely expected. And if I look at the current price pattern, right back in August we had this big correction. You know, our OWL PTF went red, it pulled back up a little bit, and then we've had this really nice sequence of lower lows, lower highs. And when this low was put in, I said, you know, I think it's time. I think there's a really clear evidence that the bear market has started. I didn't think we were going to get any kind of meaningful Santa Claus rally. Kind of made fun of that. I said, I think oil is the Grinch that stole the Santa Claus rally. And you see, we put in a lower high, new low, lower high, and you know, this week we're putting in more lows. I think that's just going to continue. It's absolutely just going to continue. And with today's open, right, it's going to be down here like this. This bear market is absolutely underway. There's no question about that in my mind. And because of that, you know, I run a stock picking service as well. And we've been short since I'm bearish on the market, primarily taking shorts. And we've gone short on just recently on FedEx. And you see, we got in here at this blue cyan line here, so we're in some nice profit on FedEx. We went short on Ingersoll Rand. We're in nice profit on Ingersoll Rand again. We went short at this blue line. We're in profit there, and we've been short China. MCHI is the ETF we're using to trade China. You see we went short here at this blue line, and we're in some nice profit. How do you think this is going to open this morning? Our position here and MCHI, right? This thing's going to be down here like this. And we're actually going to scale out, probably take some profit here at this first Fibonacci line. So that's awesome. And we're also short one more. Just looked at it. Abbott Labs, ABT. Find my cursor. ABT. This one's in a little bit of profit too. Yeah, looking good. So we're having some fun with that. It's nice to be able to identify a trend and to trade with it. See if there's any questions coming in. Tom's asking, what's the red dot? What's the pink dot? That's on the owl. Tom, that's the software identifying the highly likely wave 3 location. It's the strongest down move or up, if it were a green owl. So that's just helping us to identify wave 3. And like on this, it's done it correctly. So we see a wave 3 here, wave 4 correction up, and now wave 5 starting back down. We're looking for it to get down into this target zone down here at the Fibonacci extension level. That's what the pink dot is. All right, so let's go ahead and change this now to a 2-minute time frame. Let's see how it looks. 2-minute on the ES. Pavlos is asking about the Apple trade we took, EEM, FDX. We're going to lower our stop. Yeah, I'm going to see how it opens, Pavlos, and I think we're going to be scaling out of MCHI and lowering our stop on a couple of them here. After this call today, if we have time, I'll do it during the call. We'll see how this goes. So here comes the data for the 2-minute chart on gold. And now on the ES, I'm going to change my session. So if you want your charts to look like mine, I'm going to change the session so I'm not looking at the overnight data. And what we're going to look at here is this gap. Of course, there's going to be a big gap down, right? 40-point gap down, for crying out loud. Okay. So here's where the market closed yesterday. And now here's pre-market, right? So a half hour, this starting to paint data 30 minutes before the open. And it's really typical. It's really typical when we have such a big gap that there's going to be that gap's going to get called filled a little bit. That, here's the gap, right? 37 points, 40 points. It's really typical that even if this downtrend is going to continue, that we get some kind of gap fill, and often to Fibonacci levels. So let's go ahead and put our Fibonacci levels on that gap. Just so we got them here. There. So what I won't do, right, the market's going to open in 14 minutes, is what I won't do is just grab an entry, right? There's got to be a pattern that I recognize that meets my trade setup criteria. And like the expected pattern here would be some kind of gap fill up, right? Some kind of series of higher highs, higher lows, up, somewhere maybe toward this Fibonacci zone, and then to head back down. And we'll get a lower low. We want to take out this low, lower high. And if we do something like this, this would be an entry point for me right here, where it looks like it's turning around. We got proof that it's turning around. We've put in a low, a lower high, new low. Then there's some proof and a kind of a known pattern where it looks like it's going to head back down. So that's one pattern, is it's going to pull up, fill this gap to some degree and then head back down again. So if we get that pattern, then there'll be I'll put on a simulated trade here and demonstrate that. Last time we did this, we had some nice winners. It's always fun to, when you're doing this in front of people, to be right and to win the trades, but not all trades win. Another thing it could do is just head down. And we got a little pull up here, just head down. And if it starts heading down, I'm not just going to grab, just jump with it. That's like trying to catch a falling knife. I want to see a clear pattern up. I want to see it pull up, and that there's really going to be a continuation. So if it does something like that, that would be a trade entry as well. Okay. Now we're already down nearly 2%. So I'd actually really rather see it pull up a little bit first, fill the gap a little bit, and then look for a short trade. Frankly, it's hard to tell how much longer these trends continue before they retrace. After they retrace, we can project their extension. But just how far these big trends will continue is really hard to project. So that's kind of what I'll be looking for at the open. Now I'm leaving the gold, the overnight data up. I'm not changing the session on gold. And the reason is, this distance here on the S&P, right? This is a futures contract based on the S&P. Well, the S&P is not trading overnight. So this is all speculative, and it's disconnected from the underlying asset. So I really only want to see, the close, this pre-market data, and then I'm interested in the open when the index actually starts trading. So this is traders speculating that all the stocks making up the index are going to come down, and anticipating that. Once it opens and we settle out for a few minutes, we'll find out, and this will either go up to match the index, or the index will come down where they thought it was going. So I want to see data that's connected to the index, is what I'm trying to say. Gold trades pretty much around the clock. It is the underlying asset. So I think it's okay to look at the underlying data on gold here. Okay, and again, it's got an intact trend here that really hasn't retraced enough. I would like to see it retrace before I actually take a trade. So we'll look for that. We got a really clear wave 3. Here's that pink dot we talked about before. Shrink this down a little bit. So I'd actually like to see a really healthy retracement and then a continuation on before I just jump in. Again, it's really hard to predict how long and how far extended trends are going to go. So that's the deal. I'll look at the questions here now. George is asking, how's ABT doing? How's that? It's doing awesome, George. I had that chart up just a minute ago. I'll pull it back up while we're waiting for the open here. This is ABT, Abbott Labs. We're short this one. Again, we went short at this bluish cyan line here. Our stop is up here, and we're in a few points of profit right now, heading down toward the target. And man, this is just a great, perfect wave 5 pattern. Everything's bearish. We will scale out of this one at 47.27 as it crosses that first Fibonacci line. We'll take some profit off, but it's doing great. Get back to my 2-minute chart. Oops, wrong button. Okay. Tom, not sure I understand your question. Maybe I answered it when I went through my analysis there, Tom, if I didn't, ask a little bit. Michael saying, why 2-minute, not a 500 tick? I like 2-minute. I also like looking at range charts, and if we get a little bit closer here, if we don't see any patterns, I may switch to a range chart. On the ES, I'll use either a 8 range or sometimes a 5, and on gold, a 5 seems to work good. Okay. I like range charts because they're pure price. I don't really use tick charts. It's the same idea as a range chart, sort of, right? Takes time out of the equation. Is it, Brad saying, is it too long to buy puts on the S&P 500? Well, that's a good question, Brad. Depends on the time frame. It depends on the time frame you're talking about. I'm actually looking at, for my stock pick service, I'm looking at SPY puts as a pick for this week. And And on a longer term, I typically publish my picks on daily charts, but I've been thinking about, let's go to SPY. Again, we got a little bit of time here for the open. And even after the open, we got to let it settle down. So let's look at a weekly chart on the S&P 500. So on a weekly chart, longer time frame, my targets for the S&P 500 are here, Fibonacci retracement zones. So I've got the S&P 500 going down here. Now the SPY is like 1/10 the value of the actual S&P 500. So this on the SPY going down to 165 to 134, and I think again this bearish pattern has already started, right? And I think it will continue. Boom, 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 boom. So I'm thinking about publishing long-term puts, leaps, maybe being in January of 17 puts on SPY. And those trade in minis too. They're a little bit expensive, but they trade in minis where it's only 10 shares per option contract. And so we may just go short or, go long the puts on the SPY and hold on to those maybe up to nearly a year. And I think that may be a really good trade. So you're thinking of a month or two, Brad? That actually is not bad either. That actually is not bad either. Switch back to a daily. Because again, just like the Dow, we've got a really clear bearish pattern here. Now in the 2 or 3 month, it's harder to project prices, but I certainly think we're heading down. If you follow the ART software, the owl turned red here, and this is predicting that this low is going to be taken out. And that may happen within a few months. So that's not a bad trade to go 2 to 3 months out on an SPY put. I think that's a high probability trade to get some profit on that. I may publish that as well. Just reading through the questions here. Kent's asking, any thoughts on how to handle things when the NYSE and the NASDAQ eliminate stops this year? I've heard that. I haven't researched that in detail, Kent. I haven't researched that in detail. If they truly do completely eliminate stop loss orders, that'll be kind of a big deal. That won't be that will be a really big deal. I haven't seen that confirmed. I haven't really thought about that, but I guess we should be prepared for that, huh? I'm primarily trading with options right now, so that doesn't, I don't trade options with stops. I control risk by position size, and then, if I get a trigger off the chart, if price on the chart hits a specific stop level, then I go sell the underlying option. So Patrick's saying stops are gone on February 26th. Yeah, we'll have to deal with that, huh? Michael saying most big brokers will hold stop losses for you. I would be surprised if no stops would be available at all. That would be such a radical change. Certainly would be for my trading, because I don't go into trades without a stop loss. And like I discussed on options, I have a stop level predefined where I get out, right? But if I'm actually trading the stock, right, I have a stop loss order there. Let's go look back at the what's going on here. Pretty interesting how, boy, the S&P right now is just waiting for the open. We're 2 minutes away, stuck in this channel right here. Very narrow trading range. won't stay in there for long. It'll bust out of that. And again, depending on which way it breaks, if it just breaks down, I'm not going to, grab a short, try and catch a falling knife. I want to see a down, up, and then a new low, and that would give me an entry or a retracement pattern. Some people, it depends on your trading style, your trading rules, whether you would trade a corrective wave, up here. There's quite a bit of room to go. I think I'd be a little hesitant, though, to try and catch a corrective wave, a long trade on this up here. I think I'd be a little hesitant on that. Gold heading up. We've had, it's just, man, it's been going straight up like that. I hate to just jump into existing trends. They can end at any minute, and you could get in at the very top, get stopped out. So I'd really like to see a pullback first. So sometimes trading is like this. It's like watching paint dry. And sometimes the most profitable trade you can take, no trade at all. Alan Doyle. Miner look hot this morning. You talk about gold mining stocks, Alan? I would assume. And the regular session has started. Yeah. Yeah, I would imagine, Alan, we can go look at a couple. Let's let this market settle out and see if there's any trades that present themselves here, any good setups. But I've got a list of gold mining stocks that I'm watching that, if gold really does take off. Yeah, I think that one's on my list, AEM. In fact, let's pull up GLD while we're waiting. Because I talked about last week, I think, so here's the gold ETF on a daily chart. Look at that. I actually think that's a long entry. You see I got this channel drawn right here. That's the channel that gold was in. It's broken out. I said long entry. I really like to see, I sound like a broken record, but that's what makes trading successful is consistency. See, it's just gapped up a little bit here. It's moved up. It broke out of this channel. I want to see this. And if it does this, takes out this high, man, I'm going to be long gold. And I'll be publishing that pick. And we got a long way to go up. Gold's been coming down for years. And this could be, with the bear market starting, this could be the start of the recovery in gold. But I don't want to just jump in. When it goes up dramatically, it almost always pulls back, and I want to catch that next move. I'm not interested in catching the absolute, bottom for my entry. I'd rather be highly probable, right? And I'd rather win more and not get the exact tick entry. I'd rather see my thesis play out than to catch the absolute kind of bottom. Right? There's plenty of profit here. We don't have to jump in early. So ES looks like it is going to maybe break out of the bottom of this channel. And again, if it does, sound like a broken record, don't I? I want to see this, and I would take a short there. But it's got to be kind of a meaningful. There's an art to reading this. Okay, but we'll see. For those of you that joined later, welcome. Glad you're here. Be sure and ask questions, make comments. Again, sometimes watching these charts is a little bit like watching grass grow. And then it can get crazy exciting. So please have fun. Have a discussion. I mentioned that in my stock picks and in my own portfolio, so nothing's happening here for a minute. I'm going to go peek. That I'm short MCHI. Published this to, oh, look at that. Man, look at that gap down. 3.5%. So I know a couple of my subscribers for my picks are on here. Are you guys in? Did you guys catch that MCHI trade? Brad, yes. How do you like me now? Yes, Brad, Pavlos. George, did you get it? We're going to scale out at this first Fibonacci line, 39.77, and I'll publish that update. Or if it reverses back up and we get one of these 1B, 2B reversal bars. So, yeah. Hey, Matt, good morning. Hey, Matt, you're short MCHI, right? Yeah. Yeah, we're having fun here, huh? Let's take a look at a couple of the other ones. ABT, see if Abbott, I think everything's pretty well coming down. Dow's down over 300. Sweet. I'm not celebrating anybody else's loss, but you know, we saw this coming. We're short. So look at this. Abbott's down almost 2% this morning. We're in good shape there. How about FedEx? Oh yeah, 2.5%. We're going to scale out on FedEx here at 133.50. We'll take 1/3 off. I don't know if it'll hit that today, but pretty soon. Pretty soon. Nice. And Ingersoll. Yes, same thing. Everything's down. In fact, Ingersoll just hit a scale out point, so we can scale out at 52.10. I'll get that update out to folks, but 52.10 is the first scale out for Ingersoll. Okay. Yeah, all four of our current open positions are deep in profit, looking really, really good. And ES now wants to break up out of the channel. Gold's pulling back just a little bit. It's not giving us anything. Trying to get a link for you. Got a question here. Matt's asking about the retracements lines that I have drawn for ES. Yeah, I'm just measuring the gap, Matt. I'm just looking for this gap to get filled. So looking for a retracement into this Fibonacci zone on the gap itself. Yeah. Yeah, we're not doing a wave count here, just measuring the gap. You can see ES has broken up out of the channel now. We'll just have to see. We'll just have to see. There's nothing we can trade there right now. There, I just posted a link. I was sitting here talking about all these great picks we're in. Um, it's kind of like sitting here telling everybody, you know, how good the meal is and not offering you any. Um, so there's a link for my stock picks. There's a discount. It's a 23% discount. So if you'd like to get the kind of picks that we just showed there, everybody else, some folks are in, go to that link and sign up. It's a 10-day money back guarantee. You get it, try it out. You get 2 weeks worth of picks, and if it's your thing, you stay with me, and you know, it's month to month. If you don't like it, you can cancel, get your money back within 10 days. No questions asked, no hard feelings. So looking at the questions again, gold over 120 looks bullish. You talking about the GLD there? No, I guess, where were we at? GLD. I think it looks bullish long before 120. Um, you know, but if it gets up to 120, then it's got a long way to go. Let's look at the weekly chart here on gold real quick. All right, where did it come from? It came from 185, 190, and just a normal retracement. Even if this downtrend continues on the long term, right? A normal retracement, a wave 4 up, is going to take us to 130 to 147. So this has a lot, you know, a lot of really good profit potential, right? From 105 up to 130, you know, it's like a 25% profit. If you're trading that with, you can trade options here on the GLD ETF. We can make some really nice profit on gold. Tom's asking, how often do I host a live room? This is the second one. I did it last month when the FOMC meeting was happening, you know, their big decision about interest rates. And then, you know, I just, on the spur of the moment, did this one because I knew it, I thought it was going to be pretty exciting this morning with, you know, the China kind of meltdown, as I called it. So this is only the second one. And so you guys tell me, um, should we keep doing it? Should I do these more often? George says yes. Maybe we'll see by the end if we get any trade opportunities here. So George says yes. Tom likes the idea. Yeah, this is fun. I enjoy doing it. There's no way I'm going to do this every day, right? That's just, you know, then you're just anchored to your computer, right? That's like a real job. Um, uh, but you know, maybe once a week, you know, certainly around, you know, big events like this. This is fun to do it occasionally. Um, I may do one for the Trade Pick subscribers. I've been thinking about doing a weekly, maybe a Sunday evening or a Monday morning kickoff where we review the open picks um, and the new picks and stuff like that. Yeah, George saying once a week is fine. What do you think, Monday morning? I hate to do it Sunday night. Okay. Okay. Lorraine, I think that's Laura Dur. Yeah, that's Lorraine, right? That would be awesome. Okay. Okay. Tom, so yeah, I run a picking service, so it would be to go through, analyze the charts for the open picks, talk about, the next scale out points where we're going to move our stops to, and to review the new picks. Yeah, probably close to the open, Samson. Lowell says Sunday night or Monday morning. Yeah. Yeah, probably would lean toward Monday morning because at least until the Seahawks win the Super Bowl, because Sunday night I gotta watch my Hawks, man. Can't be in a trading room. Yeah, good luck. So here we go. ES has broken clearly out of that channel I marked, pulled up. It's pulling back right now. So is there anybody who would take a long if this goes up? If we get a bullish pyramid trading point, if it goes up and takes out this level, right? Because we might get one. We might get one if we might get a pyramid here if price goes up. Would anybody go long there? Matt says he would take it. Probably. George is looking for a break and retest of 57.75. So kind of in here. So just if we get a gap fill, right? If we're just going to get a gap fill, up into this zone, and then price is going to, if price is going to do this up into this zone and then head down, which is the highly probable scenario, then my problem with this trade, we got a red PTF, we got a red owl, which are all predicting more lows. The other problem with this trade is our stop is probably going to be here. Our entry is going to be here, and our conservative profit target is going to be here. And these are it's about a 1-to-1 trade. Not really excited about that. I don't really like having the chance to lose as much money as I have to make. Now, if it goes up to here, that's a different story, right? This has a higher reward to risk ratio. But I always use the more conservative level, right? So I don't like this one. I don't like this one. Matt saying PTF has to be neutral. Yeah, we wanted to at least go yellow, wouldn't we? Wouldn't want to go red. And look, you know about this blue line, right, Matt? So this blue line here, what will turn it green is if it goes across the top. And you can see when it crosses the bottoms when it turns it red. It has to spend a lot of time in here before it will turn yellow, right? And that ain't happening right now. The line represents the momentum, Matt. And when it crosses those boundaries, the green one on the top, the red one, that's when it triggers it to change colors. Like you can see when it broke it here, that's when it turned green. When it broke it here, that's when it turned red. So I'm not crazy about this long here. What's oil doing this morning? I see it's down 1.6. Man, how could it go any farther down? Hey George, what's the front contract on oil? What month are we trading right now? Anybody know? February. So that would be CLG. CLG 16. There's Tom. Here it comes. Oh, there goes ES. So did anybody take that? Just curious. You got your 57.75, George. Tom's already in. Okay. Well, tell us how you do. George wanted a clean break in a retest. That wasn't really a break, was it? A couple ticks. Oh, look at oil. Where did it come from? I'm going to bounce up here to 10 minute. Aha. So Matt will remember this. If you're going to analyze a trend, you got to see where it started. Wow. Up here. And that can't be 2 because it's too high. So on a 10-minute chart, we're looking at a retracement of something like this. Oil bounced off the 04 lows. Isn't that crazy? It's like 12 years ago. So this could actually be a new uptrend on this time frame. And we've already got 3 pyramids. You could even, the whole thing's red. Dang. No. So I was seeing if that was wave 3, if that was a 4, but way too deep. So we've got this uptrend going on. On the 10-minute chart, it really looks like it's wave 4 retracing there. We've got conflicting indicators. We've already got 3 pyramids. So when, it's kind of tempting to go long on this, and on the higher time frame, it looks like it's got some room to go up, but it just doesn't meet any of my rules. We got conflicting indicators, and so what do? Pass. Nope. I guess I just answered your question, Matt. sit on your hands. That's right, George. When there's no trade, right? We can't stare a pattern onto a chart. If it's not there, it's just not there. We let it go. Now on this gap fill, you know, I got the Fibonacci levels up here. It almost made it. It almost made it. And these aren't hard fast rules like a wave 4 measurement would be. It's really just, you know, measuring the amount of the gap fill. And it often retraces into Fibonacci levels. But if it reverses from here and we get bearish entry signals, if we get a there's a small chance that we could get a bearish pyramid off of this, and that would be a good entry, right? Stop. Tom says you got stopped at 57. So you were long and you got stopped out at 57. That's a pretty tight stop, man. You were in at 48. So you made a little profit there, Tom, huh? So you basically took it, well, it was still in that channel when you took it. Okay.
Bullish pyramid trading point entry now.
Yeah, it's already in the price zone. Nothing. I'm gonna mute out. This is a good time. It's 7 o'clock. I'm gonna take like a 5-minute break, go get more coffee, and I'll be back. When I come back, if you have any stocks or other symbols you'd like me to analyze, I'd be happy to do that. It'd be fun to look at some stuff. Might as well use our time well. But I'm going on mute here, about 5 minutes, and I will be back. So if you're wanting to get coffee or do something, this is a good time. See you in a few. All right, I'm back. Hey, Osman. We were just taking a short intermission. Okay, KB. Hey, thanks for being here. And good morning, Osman. Osman, where are you from? What city or country or state? Where are you sitting? Montreal, Canada. Okay. Diane says, hey, Dean, just want to tell you you called it. Apple went down to 98. Man, let's look at Apple. It was like, it was a good trade. It was a good trade. I got out of it early at the end of last year because I wanted to book some profit. Um, and some people stayed with it, and that's awesome. Isn't this amazing? Look at this. So we have an Elliott wave count up here on Apple. We have 1, 2, 3, 4, and 5 projected. We've got a target zone of 61.8 to 100% Fibonacci retracement, and look right into the zone. That's probably going to keep going lower. It's just like magic when this stuff works, and it works a lot. Man, I dig it. Yeah, so I booked my profit on this on the 31st, right? It's probably too far now to be trying to get in, um, but man, it hit the target, didn't it? It's awesome. Uh, Vasile, is that how you say your name? Vasile, anybody here from Seattle? Hey, I'm in Olympia. I think I'm the closest. There was somebody who's from Tacoma but is wintering in Miami. So Osman, you're a financial planner. Well, my clients aren't pissed off about the markets. They're loving them because we've been short. We've been short, man. George saying he got 21% profit on Apple. Isn't that fun? You have mutual funds up there. Hey, there's mutual funds that are contra funds, aren't there, Osmond? No reason to sit there and take losses when the market's going down, and it is going down. It is going down. All right. So we had a couple. Look back at the futures. I don't think anything's happening here. Nothing happening here right now. Let's watch ES. I said nothing. We got a green owl still. If we get a bearish pyramid, I'll be going short on that. But no, Matt, we don't have a bearish pyramid yet. If we get one, we'll be going short. We've had a nice pull up into the gap, starting to head down. Let's watch this here. Osman, it's dropping down for the next couple of months. Yeah, I guess you weren't here earlier. We looked at the S&P 500 and the Dow and projected. We're looking at a 30-40% correction through this year on the major indexes. So you'll be a hero if you get your clients to cash if they can't go short. Making nothing is way better than losing 30 or 40%, right?
Bullish pyramid trading point entry now.
Gold's already, wasn't a great pattern to start with, and it's already in the target zone that we've established. And we got too many pyramids, so not terribly interested in gold right now. Maybe there's a short forming up on ES, though. We'll let that we'll let that play out. But it's got a few minutes before it would do that. So let's go. Can I show the gold fib points? Yeah, Matt. It's not great, like I said. So I got a wave 1 and 2 here. So this was 3, and it's just not a great 3. We do have the pink dot. But that's where I put my fib extensions, or my retracements from 2 to 3. It did go into a 4, so I put my extensions here. And you see it's in that target zone. Kind of hard to call that a 3. I don't really like it that much, actually. It's a weak 3 if it really was one. So I'm not crazy about that pattern. Now I do like this move on the ES. What I really want here is from here, I want it to pull up and then go down. If it does that, if it pulls up, a couple bars, a meaningful pull up, and then takes out this low, man, I'll be going short right here. So that would be at about 1951 or 52. Let's just watch that. VIX is rising. We'll look at that in a minute, Bob. I'll bet it is. I'll bet it is. In fact, there was I saw a couple stock charts, right? Netflix, Amazon. It's from T. Murphy. Yeah, I'll look. Netflix and Amazon. Just looked at these yesterday. So AMCN, Amazon. So Amazon has finished wave 5 on a daily chart. We had this projected, right? I've even got the waves labeled on this, right? 1, 2, 3, 4, and 5. And it went, isn't this beautiful the way this stuff works? It went right into this target zone. So now, what's it going to do next, right? The typical thing after a 5-wave sequence is an A, B, C, something like that. So it's a short candidate. It's a short candidate. We don't have any pyramids or symbols. We do have a red owl, and we have increasing magnitude in that owl, and this is about to turn red. So Amazon might be a decent short. I'd like to see a pyramid form to give us a good stop, level and a good entry point. But it's shaping up that it could be a pretty decent short candidate on Amazon. But for me, it's not quite there yet. Not quite there yet. Netflix.
Bearish pyramid trading point exit.
Yeah, you see I had an analysis here for a long on this, and it didn't make it up into the target zone. It's in a real messy, choppy correction right now. The bullish part of the owl is losing amplitude, but the bearish part's not gaining amplitude. There's no discernible pattern here for Netflix. I don't like it. This is a chart where I look at it, go, if I can't analyze it, if I can't project something from it, it doesn't meet my rules, I just move on. So there's nothing here for me, long or short, for Netflix. It's really stuck in a complex correction. So don't like it at all, either direction. CMG. Well, look at that. Chipotle, yeah. Wow. Yeah, no surprise, right? They're just getting they just can't do anything right, with the E. coli, and they just got indicted on something, man. So here's this is where that term, don't try and catch a falling knife, right? Cleared, super clear downtrend now, right? All the indicators are bearish. Red PTF, red owl. This is wave 3. So nothing to do here, right? We actually got to clear wave 1 and 2. So 1, 2, 3. So before we could do anything, this would have to pull up into the Fibonacci retracement zone. It would have to go up into here, and then head down for a bearish trade. And then I would be interested in it. It's got a long way to go before we can do anything. You can't just jump into these trends. They could end at any time, right? So nothing here for me. Clear downtrend. If we got a wave 4 and then beginning of 5, that would be really interesting, because 5 could go, if wave 3 is over and if it retraces, say 50%, then the target zone would be way down here, like into here, the 300 range. But there's a lot that has to happen before that is true. So that's not the projection at this time on Chipotle. Yes. It's just not cooperating, is it? Osman saying you use Fibonacci in your course. Will you cover that? Well, I kind of just demonstrated how I use it. I use Fibonacci. I do Elliott wave, and I use the Fibonacci levels to confirm that wave 4 has retraced the correct amount, and then I use it to project wave 5. Basile is asking, if it's a clear downtrend, why don't you get puts now? Because it's a very mature clear downtrend, and I have no idea when it will end. It could reverse back up at any moment. So I try to get in on the beginning of trends, right, when they break out of a channel, or there was a previous wave sequence up and then the new one starting down, like we just looked at on Amazon. But if there's a really clear existing mature trend, it can end at any time, and I have no way of projecting how far it would go. So I don't want to just get in it because it's going down. I want to have, I want to be able to project it. So if it were to retrace, which it will, right? All those dramatic moves like that retrace, and that's what I don't want to go short, and then it retraces, right? And I get stopped out. So I wait till there's a pattern that I absolutely recognize and can assign probability to, then I'll go short. Priceline. You bet. Let's look at Priceline. Oh, look at ES. So remember I said I wanted ES to pull up. It is. Now, if it takes out this high, then this short we were talking about ain't happening, right? Because that's still an uptrend. That's a higher high, higher low, higher high. If that happens, we're back to the drawing board. Nothing happening. If, however, if it doesn't, then we got this. If we got this, this, and this, I'll go short there. That's kind of what I hope. That's what I hope happens. All right, Priceline. I looked at this the other day. What's that symbol? Is that it? $1 million stock. Yeah, here we go. Okay, here's price line. Look at this. As soon as I see this, when I pull up a chart like this, I just leave. I just leave. Why? Because it's a mess. It's a mess. There's no discernible pattern here. Um, there was back here, obviously, this uptrend, right? But now, look at this channel it's been in. It's just bobbling along, now between here and here. There's no trend. There's no pattern. So there's nothing there for me. It would have to break this pattern, and it's got a long way to go. Now we do have a red PTF, which is interesting. So if it were to break this channel, if it were to come down, break this channel, now we would have something interesting, right? I would want to see a like this, and then I would go short, and we could have a trend happening there. But that hasn't happened yet. AEM. Pavlos would like AEM. While that's loading, peek back here. Oh, look. AEM. Ah, mining, gold mining. The email is going nuts. Let me turn that sound off. There. We've got kind of a classical wedge here. You see this? Now with gold going up, we expect this gold mining stock to go up, and you can see it is. I would like to see it break out of this wedge. I didn't draw it very well. It's more like this, right? And it is breaking out. We want to see it break out, pull back, and go up. That would be a long right there. What's really nice is the way we're losing amplitude in our owl, the negative part, and we're gaining amplitude here. This is showing us that there might be an uptrend starting. So I want to see it go up, pull back, and then as it puts in a new high, it doesn't even have to take out this high yet. I think there's a uptrend starting there. So not there yet, but it's getting close. There could be a ton of profit in that. Gold's got a long way to go up. Matt's asking about scaling out of ABT. Let's look at that real quick. Yeah, the scale out point on ABT is 4127, Matt. First Fibonacci line down here. So we're not there yet. Getting close. We're getting close. This is one of the short stock picks from my stock picking service. If you weren't here before, and we are in phenomenal profit on this one. On MCHI. Let's see how that's doing, by the way, today. It's awesome. Down 2.65%. We got in at this CION line. We went short, and we are racking up the profit. MCHI, ABT, Ingersoll Rand. That's nice shape, and FedEx. Great. super. Everything's down about 2% this morning for our short positions. We're liking it. We're liking it. Tesla. Okay, Osman, let's look at Tesla. While that's loading, we'll peek back at our futures. It's doing what I wanted, isn't it? It's doing it. I'm going to go ahead and stage an order here. Remember, this is for demonstration purposes. I'm not recommending a trade. Don't know your situation. So this is a sim account. I'm just going to trade 3 contracts. The sim account 60,000 on a $60,000 account. Our risk management would say we're not going to use more than about $1,200. I want to be 1 tick under this low here. Am I? Yeah. There's my stop. 1 tick above there. I don't even really want this limit. I don't know why I shouldn't have put that on there. I used the wrong OSO order. In fact, let me get rid of it. Stop all the way. All right. No. There.
Strategy. Bearish pyramid trading point entered.
No, Osman, this isn't Tesla. I'm staging an order for the E-mini. Okay. Now we'll look at Tesla. Tesla, kind of like Priceline. Right now it's ugly, stuck in a channel. This had a wonderful uptrend a couple years, or year and a half ago. And since that uptrend, back then, the thing went up 400 or 500%. Now it is stuck in a very ugly channel. I don't want any part of it. It's just meandering back and forth. It's not doing anything. No trend established. So nothing there for Tesla for me. Yeah, I don't trade. I call them the winged creatures, iron condors, butterflies. I like to see a trend. There's plenty of stocks out there with either a clear uptrend or downtrend, and then I just buy a put or buy a call. I just try and keep my life simple. Trade with the trend. Go with the major market trend when possible, and buy a put, buy a call. I know there's all kinds of other strategies out there, for sideways markets. Trends are easier for me to deal with. Right? They're easy to see and to project. I can't project how long a channeling market will continue to channel. Oh, look, on the ES, the software is painting a potential pyramid right where my entry point is. Now, if it goes up above the top of that, above that tick, that yellow thing's going to go away. And remember, I said if it does take out this high, I'm not interested in this. This thesis is disproven. But we'll see. If it does reverse now and head down, we'll get a nice short entry. Just have to see. For education purposes only, I'm not recommending anybody take that trade. Any other, did I miss anybody's stock? I'm scanning back to the questions. UVXY, the VIX ETF. That's going to take it out. Just watching for a minute. UVXY. This is fun. We traded this one earlier on my stock picks.
Bearish reversal bar exit now.
Now, of course, you know, the market's been going up for 6 years, so this UVXY, this is a VIX ETF. It's been going down, but let's drill into a 60-minute.
Bullish pyramid trading point entry now.
Look at that, up 10.5 today. So this, you know, this is the volatility index, and it itself is highly volatile. Look at that. So this does have a clear you know, it had a little run up before, then it got into this channel. I've got this channel marked, and then it broke this channel. It broke up, down, and now it's put in a new high. So that actually is a okay entry right there. You'd want your stop down here. You'd want your stop down there at least, and maybe even under the gap. That would be the way conservative one. This would be the more aggressive one. But that's actually an entry for me. It's a nice pattern. It's on a 60-minute chart. CLI. Alan's interested in CLI. Well, let's just see what that is. Put that on it.
Pyramid trading point exit now.
Well, there's a clear uptrend. Pretty choppy uptrend, huh? And look how we're losing some steam here in the owl, right? We're losing momentum. And so again, this one I would not go long now. I would call this wave 1, 2, and this was 3. And so I would want to see it retrace solidly down into here and then head back up before I was interested in going long on it. So it's got a ways to go. And I don't really like the volatility of it, right? It's a trend, but it's a pretty messy trend. So this isn't my favorite. I'd be looking for something better. I'd be looking for something a little bit clearer. Okay, so let's kill this order, right? Not going short on this at this point. Okay, go away. I had this trouble when I was doing the trading room before my sim account. The little delay in the order place. There we go. So remember I said if it took out that high and it went up to it, we got this MP. So yeah, I'm not going short on this at this time. Remember we measured this Fibonacci lines here. We measured this gap fill. It looks like it's going to at least get into here. Look at that, 90 minutes we've been in here, no trades. But we've had some fun. We've analyzed some stocks. And I think that's good teaching, right? Sometimes the best trade is no trade. No reason to force it. Well, what's gold doing here? Yeah, let's look at ULTA. Oh, ULTA. Cosmetics and fragments. Well, look at this. Downtrend isn't affecting them, huh? It's been in a really long uptrend, uninterrupted except for this one day here. For a long time. It's like this trend started July of 14. So there's no way I would go long on such a mature trend. At some point, it's going to retrace. Now, if we disregard this as an anomaly, right, then it hasn't retraced into wave 4 yet. If we didn't want to discard that, if we thought that mattered, then that was a wave 4 and this is 5. Either way, it's reaching trend exhaustion and it's due for a correction. So I'm not going long on, not interested in ULTA. It's a nice trend, doubled. Matt wants to look at NQs. So let's do that. Because we got nothing here, right? Not going long because I believe this, the probability is probably in this zone, this retracement, which is this big gap to the open, right? That's a very normal gap fill retracement. At some point, it's going to reverse, right? So I'm not really interested in going long. The probability, particularly with our red PTF, is that this will end pretty soon. There's not really any upside potential here. So I'm not going long, and now I got to wait for it to head back down. So nothing here. So let's look at the NQ. Look at the Dow is recovering. It was down over 300. It was like 311 when we opened. Now it's at 143. So here's the NQ. Let's do like we did here with ES. Get rid of the overnight data. Just look at the close to the open. So it really looks just like the ES, doesn't it? Right now it's right up into this retracement zone from the opening gap with a red PTF. So it's a mirror of ES. Looks just like it. Exactly like it. So really the only reason to trade the NQ versus the ES at this point, since they have the exact same pattern, is if you got a smaller account, the margin and the tick size on NQ is smaller. Alan's asking about RTN. Let's go look at that because we got nothing cooking here. Let's just look at oil again real quick. Oh, look at that. Oh, we want this on a regular session. Wow. It's a pretty dramatic move, pretty hard to trade. Oil's volatile. Remember we looked at this a while back, probably an hour ago, we looked at this on a 10-minute chart and said that we thought this retracement was pretty likely.
Bearish reversal bar exit now.
Look at that. It's almost up into the zone now. We thought that it would retrace at least up into here in the short term. It's heading there. But on the smaller time frame, there really wasn't a good pattern to take that. Too bad. Uh-oh. The chart's locking up. There we go. Okay, RTN. Yeah, same answer, Alan. That's a mature trend. And it hasn't corrected into a 4 yet, actually. So, who knows? It could go higher, but we just don't know how much. We just don't know how much. And it actually looks like it's losing some momentum, but it's done that before and take off. So, yeah, I just can't. When I can't find a pattern, I don't trade it, right? Because there's plenty out there with super good clear patterns that we can trade. And Michael is saying, CNBC just announced that China is removing the circuit breakers, presumably for good. Wow. Now, I think they're closed, right? Yeah, Alan, I'll do that in a minute here. Yeah, so the Asian markets are closed. So I guess that article is when they open tomorrow, there will be no circuit breakers. That's pretty interesting. I know that the Chinese government is intervening in the market. I mean, we got circuit breakers, on our markets, but the Chinese government is trying to step in with, rules about who can sell stock, and they're pumping in capital to try and prop it up. They're intervening in the stock market in a way our government does not. And I kind of think that's going to, let the markets be the markets, and don't use artificial stuff, because it eventually will just crash, my opinion. So that'll be interesting tomorrow. If there's no circuit breakers, maybe it will just be in free fall. Good news for our China ETF short, huh? Okay, Alan's asking about proper points to use when setting up fib graphics versus different time frames. So it's the same on any time frame, Alan. Same on any time frame, right? These patterns are what's called fractal. They show up at any level of magnification. But let's look at Apple, super clear case here. I'll take them off so I can demonstrate how to put them on. So you can see I've got my waves labeled on Apple. These are Fibonacci levels. or Elliott waves. Now, I could only label wave 3. We start by looking for, the most dramatic price movement. Well, the most dramatic price movement is here. And I've got a pink dot on the ART software helping me to identify wave 3. I got the deepest owl. So this is clearly wave 3. And then I go look for, well, where did this start, right? This downtrend. It started here, right? And I look for a wave 1 before that. So there's a wave 1, there's a wave 2, and the rule for wave 2 is it can't go above, this previous high where wave 1 really started back here. So this is all wave 1. This is wave 2. This is wave 3. And then when I get a wave 3, I want to see a wave 4 retracement, and I want to see it into a Fibonacci retracement zone. So I take my Fibonacci retracement tool and I measure from the top, and this is a bearish trend, so from the top of 2 to the bottom of 3. And I get my lines over here. And I want to see it retrace at least into a 61.8 to a 38.2 into this line. It can go beyond it. We don't want it to go beyond 76.4. And you see it did not close beyond 76.4. It pushed it, it nudged it, but it's still meeting my criteria. And so I have a 1, 2, 3, 4 wave, and now I use Fibonacci extensions, and I go, extension lines take 3 points, so from 2 to 3 to the top of 4, and those give me a profit target zone. Wave 5 should end, high probability, nothing's guaranteed, between 61.8 and 100%. That's why I've got these lines drawn green here. And so this was an entry that I published for my subscribers. We went short here at this cyan line. Our initial stop was up here. We've obviously trailed the stop, this red line, down to here, and my target was this green line, and you can see we've gone past the target. So this was a beautiful Elliott wave exercise. That's how we put the Fibonacci lines on there. So this one was awesome. We made some really nice profit on Apple short, and it could still go down more into this 82 to 97 range, and the indicators are saying it probably will. This red PTF is predicting more lows, and this, it may pull back up, and it's been coming straight. It may pull up, probably won't go above this stop level, and then it'll head down again. How was that, Alan? Okay, good. You're welcome. You're welcome. And you can do that exact same analysis on a 2-minute time frame, a 60-minute time frame, right? The patterns are the same. They are fractal. Now I'm using my Fibonacci lines differently here. Remember, on this one, I'm simply measuring the gap, the opening gap, and just seeing how much it retraces. And now we're heading back down. At this point, before I go short, I would like to see this owl go red. And I want to see lower low, lower high, lower low. And if that happens, I probably will get my red owl. So it's 7:45. Let's give it till 8 o'clock. And if we got something really close to a tradable pattern, I'll stay with it, and we will see if we can get a trade on the ES. If by 8 o'clock there's really nothing there and it's still just bobbling around here, I think we'll wrap it up. So we'll hang here and just man, again, I'm amazed how many people were interested in attending this kind of trading room. Pretty overwhelming interest. So if you weren't here earlier, we talked about may do this more frequently. Certainly not every day. Again, that would be like a real job. And I got my stock picks to take care of my subscribers there, and trading, my own trading and training sessions and stuff. But yeah, maybe a couple times a month if there's a continued interest. I did put a link in the chat area if anybody's interested in the in the stock picks. You know, we went through those earlier. We're in 4 positions right now. We've got, I hope I don't sound boastful, but we've got some stunning profit in our positions. We closed out last year with really, really nice profit, and we're starting this year off in super good shape. So in the chat area, there's a link for everybody on the call. You can get a discount, 23% discount to my stock pick subscriptions, 10-day money back guarantee. Osmond's asking, what did I say about Amazon? Well, I forget. We looked at a lot of charts. Let me pull it back up though. I don't have to remember because I analyze the charts the same way every time. I said 5 waves had played out into the target zone, and after a 5-wave sequence, you can see I've got a label. There's 3, 4, 5 right up into the target zone. The next thing after a 5-wave sequence is usually an ABC correction like that, and it's broken a previous low. It's down here. The owl is red, and the magnitude of the owl is getting bigger. So this looks like a pretty good short right now. You could go in now. It will probably pull up and then head down again. So you could let it do that and take your short entry when it puts in a new low here. But it actually is an okay short right now. Super expensive stock. Probably want to do that with an option. And you want to give it, you know, we're in January. I would look out at a June contract if it were me. I would want some time. I don't want this to, you know, I think the absolute worst trade in the world is when you're right and you lose money. Got to get an amen for that. So I want to buy a contract that's far enough out so I can be right and make money and not have it expire on me. There we go. Okay, we got a couple amens. Yeah, so we want to give it time. Osmond saying he bought my option course. We get these picks. Yeah, you're going to get a pick every week, Osmond, an option pick as we go through the course. It's intended to be a 6-week course. I've got a module each week, a video, so you get written material you can study. There's a recorded video that you can watch, and then we'll have a webinar where we'll go through and answer questions. I'll teach on the module, and we'll look at one pick each week, one option pick. Okay, so look, that's kicking off on the 15th. So like just over a week from now, we're going to have this new stock options basic course where I cover, you know, quite a bit of detail about stock options, how to understand them, how to analyze which one to take, which contract to pick, what the Greeks all mean. It's going to be fun. I'm looking forward to it. So if anybody's interested in the stock option course, email me. I had a special running a pre-sale last year, but if you're interested, I can probably still hook you up. I'll put my email. There's my email. It's dean@followmetrades.com. So if you're interested in the stock options course that begins on the 15th, shoot me an email. We'll see if we can get you in on that. Got quite a few people in it already. There was a lot of interest in that, and it's going to be fun. If you were here when we first started at 6 o'clock, I pointed out that on the 10-minute chart, the gold and the E-mini were like an exact mirror of each other, right? The E-mini had gone down about 40 points, and the gold had almost the exact pattern going up. Look how they're moving together now. Isn't that irritating? You know, when you expect something to happen and it doesn't happen. That's why I say the correlation between them is strong. Strong but not perfect. And now I just feel foolish because this is oil, not gold. Oil is heading up. Let's see what gold's doing. Hey, Matt, take care. Glad you could join. No, that's less irritating. This was going up, gold's going down. So that correlation does hold. So again, if we don't really see anything interesting by 8, we'll go ahead and wrap it up. Any other questions while we're waiting for that? Alan's asking, do you use GLD when trading gold options? Yeah, the GLD, is the gold ETF, and that's a really good one. I like it because super high volume. I mean, what's the volume today on GLD? Not there, super high volume and are a super deep option market. There's plenty of contracts. So here we are, at 8 o'clock, hour and a half past the open, and we've got 4.3 million shares traded on GLD. So it's got great liquidity, and the the option market has great volume, and weekly, monthly. They might even have mini contracts on GLD, so I like it. I also like trading some of the smaller cap gold mining stocks, right? Let's just look at the option chain here on GLD. Yeah, see, they got minis, which is only short term apparently. That's nice if you have a smaller account to trade the mini contracts. But if we were to look out here at April, right, there's really decent volume, open interest on these. It's a little bit less than I thought. Usually it's in the thousands, but that's pretty good. Oh, look here, 10,000. Yeah. So in the closer contract, look at this. Look at the volume on the open interest here. It's huge compared to most options. So I like it. Let's look at Nugget, small cap gold mining stock. It's actually an ETF. It's a 3X gold ETF. So I was seeing if there was a good pattern here on the 60-minute chart. Not great. Well, now that the data filled in, it's not. I'm not crazy about it. It's probably the same thing. This is another gold 3X thing. That's actually better, isn't it? Look at this. The channel really settled down to here, and it has clearly broken out of that channel. So I'm like a broken record. What do I want to see? Got this nice break. I want to see it pull back. I want to see a new high. And if we do that, if gold keeps going up, this could, this is a 3x, so it'll go up 3 times the speed of gold. So UGLD might be a nice short-term trade. You don't want to trade these 3x things. I don't like to trade them longer term. But where could it go to? Well, even just a retracement from current highs could be up into this zone, right? 9 to 10, right? From 8. So, by the time we put in a low, a new high, we take it out, maybe we say we're at 850. From 850 up to 9.5 to 10 for a couple week trade, that could be some decent profit. That's not bad. That's got moderate volume. Today it's traded 292,000 shares, so not super high volume. Not terrible. We already looked at AEM. What about Harmony? Gold mining, Harmony. 60 minute. Let's look at the daily. Same deal. It's coming out of that channel really nice. We want to see a pullback. We've actually got two pyramids. It's moved up quite a bit. I'd like to see it pull back and then go again. This could be a nice one. Right. And look at this. So even if we get a retracement off that last low, that last high to low, well, it's not that great, is it? This could, higher highs, higher lows, Alan. That's the definition of, the Dow definition of an uptrend. I'd like to see that happen, it takes at least 3 data points to confirm that a trend. It's a higher high, higher low, and a new high. If this were to retrace a reasonable amount and head back up, man, you could get in this thing at $1.38 and maybe get up to, and it doesn't look like much from $1.38 to, $1.89, $1.90. If you think about it, if it was a $13 stock going to 18 or 19, you would think that's exciting, and that's really the same thing here. And this trades with pretty good volume, 1.9 million so far today. So Harmony might be a good one. Harmony, gold mining. Can we look at GLD? Yeah, we did earlier, but let's do it again. So Diana, what we said here on GLD was I had defined this channel with these purple lines, and it's broken out of that channel, which is really good news. And we want to see it. It broke out. We want to see it pull back and put in a new high. If it does that, that'll be a long, and that could be back to your question, Alan. The indication that the trend is changing. And we see the momentum coming out of the owl here, right? These are getting smaller, progressively smaller. Even with the trend being down, the momentum's coming out. That's called bullish divergence, and we see these getting a little bit bigger. This is all pointing to potentially a new trend. So that's pretty exciting. that might show up in my picks. Okay, so ES, look how this, we talked about this zone here. I'll extend these. Format, extend right there. We talked about that gap fill. Remember, here's the open, the gap down, and that the high probability gap fill retracement would be between these two lines. Right? And there it sits. So if it reverses from here, there may be a good short entry. We want to see this. We want to see this owl go red. We want to see really clear. Just we're not going to take it off of one bar off this reversal. We want to see a pattern, right? We want to see a new low put in. We want to see it pull up. Then we want to see it take out that low, and that would be a pretty good entry. And if it does that, this will probably have gone red, and this is still red, so that would be a short. But that could take, 20, 30 minutes before we got there. So we got like 50 people in the room still. So just a quick poll. Anybody, you guys want to stick around, see if this ES trade materializes? Stick around till like 8:30, or you guys got to run? Okay, we're getting some thumbs up. Okay, so we'll stay till at least 8:30. Let's. I'm going to take another quick 5-minute intermission. So if you want to get coffee or stretch, whatever, now's the time. I'm going to mute the microphone, stretch, do my thing, and we'll be back on in about 5. All right, I'm back. And looks like ES pulling back just a little bit like we want to see. This is all good. This is all good. So, in my trades, I look at two things. In my analysis, I look at the probability that the trade's going to win, and then I look at the reward to risk ratio. So I want to have a high probability, and I want to have a high reward to risk. So I'll show you a trade here. I'm bringing it up, maybe. So here's a trade that has a very low probability, but a very high reward. Look at that. $675 million for $2. But it's pretty low probability. So I call that a $2 permission slip to dream, right? Okay, that was funny. You gotta admit. Thanks for laughing, Mike. Yeah, Tom. It's all about dreaming, right? That's what they tell us. Very low probability. $675 million. I wouldn't even mind splitting that prize with somebody. That'd be all right. I wouldn't even complain. While we're watching this, go ahead and just scan those equity positions again. So we are in FedEx. Very nice. Down 2.18. IR. .19% today. 1.91. Probably going to move my stop down to here. See how it closes. So we are short MCHI. So if the China has removed their stops and they open tomorrow and just free fall, man, we're already in deep profit. We got in at this line. It's down here. What got in at 45? It's sitting down at 41.50. We will be scaling out at this level right here at 39.77, taking 1/3 off, locking in some profit. Abbott. It's the final one. Oops. B. T. Enter. Yeah, same thing. We'll be taking profit here at 41.27. Very nice. Don't like gold. It's kind of a mess. So I'm just going to focus on ES right now. Yeah, I see that story that somebody else was talking about earlier on CNBC. It says the Chinese regulator suspends circuit breakers. Reading. On Thursday, China's Thursday, the circuit breakers kicked in 29 minutes into the session.
Bullish pyramid trading point entry.
Wow, so the same article says the U.S. circuit breakers don't kick in until 20%, a 20% drop. Wow, that's big. Why are they allowed to do this? Steve, you're talking about China? And Tom has the answer, Steve, because they're a communist country and they do what they want. That's Tom's quote. But he might be right. And Steve says, well, that explains it. Yeah, that's what the article says, that maybe the circuit breakers are causing more instability than they are fixing. That could be true. Interesting that ours are set at 20%. So we've got a few minutes for this this scenario here on ES to play out. But it could. Actually, I kind of like this setup. Now it retraced right up into this Fibonacci zone from the gap down. I just want to see this pattern continue. Right? We saw a pullback just like this one, and then it took back off. So I'd like to see it go up and then come take out this low, and that's probably 3, 4, 5 price bars from now. So I think we'll have time before 8:30 to see if that happens. Be fun to get at least one trade in this session, huh? But
Strategy alert.
wow. Hey, can you guys still hear me? My my trading connection dropped. Okay, so I still got a good internet connection. So here's a funny story. I was doing a webinar with Traders Coach, and it was on trading in your IRA, and my internet connection dropped, and I had no idea. And I sat here for 15 minutes and talked to my computer screen all alone, and I had no idea that I was no longer on the webinar. It was awesome, and I was good too. I was at my best. I was really on a roll. Gene McDowell was texting me and calling me, but of course I had my phone off because I was presenting on a webinar, so I had no idea. These are the moments that keep us humble. So any football fans? Who will the Seahawks be playing in the Super Bowl? Notice how I phrase that question, right? Not a question of whether they're going to be there or not. We got Marshawn Lynch back. He's going to be in the game. The beast is back.
Strategy bullish pyramid trading point exit.
Okay, you see that our owl just turned red here. That's one of the things we were looking for. That's good. Go ahead and fire up my chart trading tool. Get my stuff set. Oh, Matt, you're still here. I thought you were bailing out, man. Okay. Are you playing hooky from work, Matt? Ah, okay. Well, we're just not getting the pull-up that I was hoping for here. I kind of hate it when it just, but you know, this is what disciplined trading is about. Um, I mean, there's a temptation maybe to just jump in now, like, okay, it's heading down, let's just jump in, right? It's not good. Let's let it prove a downtrend. And also, if we were to go in now, where would we put a stop? Well, it'd have to be clear up here. That's a lot of, that's what, 69 to 50. That's a 10-point gap, right? I've actually got this compressed. Here's what it really looks like, right? That's a 10-point gap. So for every contract, right, it's $100 per point, $25 a tick, $100 a point. That's $1,000 per contract loss, right? If I got 3 contracts, that's 3,000. That's big. So no. Samson's asking, did we take any trades? No, we're still waiting, Samson. It's like watching paint dry. You know what the good news is, Samson? We haven't lost a dime. We have not lost a dime because we didn't take any lame trades. We didn't just force it. That's right. Matt guessed the good news even before I said it.
Strategy. Bearish pyramid trading point entry.
Oh, I'm going to quote you on that, Samson. I'm going to save that one. You can't go broke conserving capital. Ain't that the truth? We're here to make money. We trade to make money. Oh, look, I got a pyramid. So that's a really small one, but it gives me a stop. So we've got a red pyramid. I told you I wanted to pull up in this downtrend. So we got a little one. We've got a red L. We've got a red PTF. We really are all systems go here for a short trade. So I'm going to, what I'm going to do is I'm going to stage it. If we take out this low here, I'm going to go ahead and stage this trade. So remember, I am not recommending anyone take this trade. I am doing this for demonstration, education purposes in my sim account. I'm going to move my stop 1 tick above that. And I got my entry, my 1 tick, my 2 ticks. I think that's 1 tick. Okay, good. So let's see what happens. This could be fun. I'm just doing this 3 contracts in my sim account. It's a $60,000 account. So the without whipping out the trade size calculator, it should be about right. 2%. Remember the risk management guidelines, 2%, 60,000 times 102, $1,200. So we shouldn't have more than $1,200 risk on any given trade.
Bullish reversal bar entry now.
So Tom is saying to check the 75-second. Well, why not, Tom? Why not? I don't usually trade that interval, but I'm game.
Bullish reversal bar entry now.
Oops. Yeah, that's interesting. It's really the same thing though, isn't it? I got some MPs here. Here's another fun way to look at the ES. That's on a range chart. This would be 5. So it's moving pretty slow. So let's do it on a 5. Yeah, Steve, I got an order set. My entries at 1958.25. My my stop I'm using an OSO order sends order, so my stop is at 63.75. So here on the using a 5 range chart, this would have been a good. This gave us a bearish pyramid up here, right as the owl was going red. In this particular moment, that would have been a good time frame to a good interval to use. 5 range. We would already be in that trade. 5 is pretty fast. Let's see how it looks on an 8. Yeah, it looks almost like the 2-minute, doesn't it? Yeah, art works with the range bar. It absolutely does. It wasn't until TradeStation 9.5 that the reversal bars worked on a range chart. They didn't used to work, but something's different about how TradeStation presents the data to the indicator. So now the reversal bars work for art. The pyramids always worked. Which are you talking about, the owl down below, Tom? This oscillator down here? Are you asking what that's conveying? You mean the color of the actual candlesticks? Or are you talking about these lines, these blue and gray lines here? These are Fibonacci lines. It's like a guessing game. You mean the precision trend filter down here, this line? Oh, look here on the 8 range chart, we're going to get a bearish pyramid right at our entry point. It's kind of double confirmation. This is pretty nice. Oh, art color bars. I have to refresh myself on that, Tom. I don't use them. I don't have the color bars even loaded. I just like the standard, red and green bars. Yeah, I got to look that back up. I'm supposed to know because I do quick start and training for that system, but I haven't used them in so long, and people don't really ask about them very much. You use the right terminology. The color bars, Tom, and I asked you about everything else, and you're like, no, I'm asking about what I asked about. Yeah, Bob, we looked at UVXY a little while ago. Is something different happening there now? Oh, I had myself muted and then I was answering your question. Yeah, Bob, the VIX is rising. We looked at UVXY earlier. We're going to stay on this chart right now. We might just get our entry here and this will be fun. You see that potential pyramid forming? A little bit bigger one right here. This is awesome. We got our stop. I think we got our entry in the right place. If it goes and takes out that low, then super high probability it's going to head on down. That gap fill that we've been talking about for hours is over. Pretty sweet how it went right into the Fibonacci zone. This stuff's like magic, isn't it? So, show of hands, who thinks we'll get this fill in the next couple of price bars? Yes or no? God, yes, sure, yes. Get what? That we'll get our order filled. That the price will go down to 1958.25, and we will get we'll be short the ES here. Yes, yes. Seems pretty tough. Larry says yes. Samson's a maybe. Steve's already short. 61.75. Well, you're going to look either like a genius or a fool. No, you won't look like a fool. Uh, Not in 2 bars. Down. The Tom says the upward momentum, I think, winds have abated. That's a famous Alan Greenspan line. He was testifying before Congress, and they said, you know, Mr. Chairman, what do you think? What do you think is, holding back the economy? And he goes, headwinds, sir, headwinds. Guess you have to have a PhD in economics to figure out that it's headwinds holding back the economy. It's going to pick a direction here pretty soon. What's the volume? Yeah, pretty high. 1.5 million contracts so far today. So if these yellow, if we both of these are exactly the same point, we go one tick higher, the yellow ones will be invalidated. They will go away. And that'll be a little sad because those are really good. We'd really like to see the price come down and those to get confirmed to turn red and we'll be in our trade and off to the races. If the price goes up and they go away, that will be sad. It means the picture is less clear. Powerball is now 700 million. That's like the highest it's ever been in the U.S. 700 million. So for $2, you can go buy a ticket, and like I said, it's a permission slip to dream. That's how I look at it. Here in Washington, if you go buy some groceries and you want to get a lottery ticket, and you're paying for your grocery with a credit card. You can't put a lottery ticket on a credit card. That's just so irritating. Like I need the government to worry about my gambling problem. My $2 lottery ticket. 1 in 250 million chance to win. Yeah, that's why I say that particular trade, your $2 trade for a lottery ticket, is a very low probability, but it's got a very high payout ratio. Very high. Oh, you can't even buy lottery tickets in your neck of the woods there, George, huh? Alabama, very high payout ratio. Yeah, that's right, Tom. High payout ratio for the government. That's right. Yeah, because somebody's going to win it eventually, and whoever that is.
Strategy alert.
Yeah, I know, Samson. Worried about the guy who's going to spend his rent money on tickets. I'm just more of a libertarian. I just you know let people make their own choices. Well, we are in a wedge. I'm going to stick with this. This is kind of fun. Um, we're in a wedge. See this shape? It's called a wedge or a pennant. The fact that price is trading in a very narrow range can look like the market's very stable. What this really is instability. And as it compresses, it will not stay here. It will break pretty dramatically, usually, one way or the other. So, all the signs are showing us, right? We filled this gap way down. We retraced up here right into a Fibonacci zone. We've got a red owl. We got a red PTF. So the high probability is going to break down. So we'll just have to keep watching it and see. But that's what's going on right now. Is we're in this wedge or pennant. And for now, it's going up. And we are losing. We lost our yellow pyramids. Oh, isn't it nice that I did not go short, that I waited? Because in one more tick, we would have got stopped out.
Strategy. Bearish pyramid trading point exit.
So if I had gone short on this pyramid without waiting for this next low, we would have just got stopped out for a small loss. So who was it that was, somebody was already short? Steve, you still with it, man? Three ticks and out. So you caught a little profit on it, huh? That's like a scalp, though. That wasn't. That's what it sounds like. Scalp trade. Was trying for a point. Well, at least you didn't lose. That's good news. Here it goes. Oh, look at this. So I still like this as an entry. I'm going to bump the stop up one tick. Want to be one tick above that last high.
Push reversal bar exit now. Order filled.
We're in. How fun is this? Took us 2 hours 45 minutes to get a decent entry. Next thing I'm looking for is a legitimate place to, I'm short 3 contracts, and I'm looking for a place to take profit. If we get a bullish reversal bar, if we head down, we're deep, pretty into some nice profit, down into here, and we get a bullish reversal, that will be a clear sign to scale one out. Another sign, we got our next real support level is right here at this line. I'd make that purple so we can see it. You guys can see where that's the last kind of support level, right? Price didn't go below it. If we get close and look like we're going to bounce off of that support level, I'll take at least one contract off and lock in some profit there. So Larry Bethurham, this is like the first time you've seen the live trading, isn't it? Oh, okay. Yeah. It's about as exciting as an ant race sometimes, huh?
Bullish reversal bar entry now.
I missed Tom's comment earlier. That's pretty funny, Tom. He says lotto comes from an ancient Latin word that means fool's tax. That's funny. I've heard someone else say it's a math tax. A lotto is a tax on people that can't do math. Yes, sir. Hey, Larry, glad you're enjoying it. It's kind of fun. I may again do this a couple times a month. Tom's asking, where was your stop entry? You want to know where my stop was or where my entry was, Tom? I used a market order for my entry at what? At 1958.25. Oh, where's the base of the pyramid initially? Yeah, the base of the pyramid was here at 63.25, so one tick above would be 50. I went ahead because you can see price did go up. I wanted to put my stop up here at that last high. I'm two ticks above the base of that last pyramid because technically that pyramid got stopped out. The apex of the pyramid was here at what would that be? Uh, 61, 1961. So the entry would have been 61.25. It was such a small pyramid. I hadn't seen the real pull up that we wanted. So I waited for it to pull up and go back and take out this previous low. So I really wasn't trading off of that pyramid, Tom. I was really pure trading off of price action here. I took my entry Samson with a market order. Um, you know, I, I don't see much slippage on ES, so I'm comfortable with my entries and my stops being market orders. Worst slippage I've seen is a tick. Oil has um, it you can get 3 or 4 ticks of slippage sometimes, more significant. I'm recording this session. I can't imagine how much data this is using. But I got plenty of room on my hard drive here. So if this trade loses, I'll just delete the recording. Don't want any evidence of that. Tom's question, do you observe that sometimes the market sort of reverses polarity where bullish pyramids are quickly sold and bearish are bought? Yeah, that's why we're trying to trade with the trend, Tom. And over hundreds of charts, the the uh, the pyramids really do. When you're in an impulsive wave, um, uh, the pyramids give you great entry and support resistance stop levels and scale areas and stuff like that. If you're just taking every pyramid without the context of a trend or a wave count, then I think your comment is right. Um, but when you bring other tools into bear, you use the enhancers, the OWL, the PTF, you use wave count, trend analysis, right? That's when you really get the high probability. That's why we waited so long to take this trade. George says he's looking for it to come up to 61. Well, I won't get stopped out if it does that, right? So you're looking for it to go up to 61, then continue down. Could do that. Could do that. That would actually give us a pyramid. So if it does that, we'll get to move our stop, which would be awesome. Larry is asking, what's my win-loss ratio? He likes how consistently reinforce the opportunity plus risk management. Yeah, I haven't day traded a lot lately, Larry. Um, I have to. I think the last look when I was really logging it was about 65%, 65, 70% on day trading. Day trading's, I think, for me, day trading is the hardest kind of trading there is. My win ratio is great on daily trading daily charts. The two things we measure are win ratio and payoff ratio. Win ratio is, of course, how many trades did you win versus lose, and payoff is the amount you win versus the amount you lose, and that's actually a more important statistic. Oh, I can't do that. Samson's asking me to go full screen here. Bob's asking, can I automate this? No, no. There's an art to it, and I mean you can set up alerts on the signals, right? I tried for so many years I tested other people's automatic trading systems. I tried to develop my own. Um, market conditions change, and there's an art to analyzing markets, and I kind of want my hand on the on the till, right? I don't want a computer spending my money. Oops. Is the screen's blurry, Tom? Has it been that way all along, or did something change? Hmm. Larry's saying it's not blurry to him. Michael's saying it's not blurry to him. Well, Tom, yeah, Samson says resolution. Okay, now you maxed it out. Okay, good, Tom. Good. So now we're stuck in this little channel here. It will break out. Dow's back down 200, so it's dropping too. Really want to see it take out that low. That would be good news. If it stalls there again, I'm going to take one off just to manage risk a little bit. Oh, nice. Samson's asking a sidebar question. What's the best way to trade options with a stop loss order? What I do, I don't like to put a stop loss order on options because the bid and the ask, stop loss orders are market orders. And so the bid and the ask spread is often quite large on option contracts. And, you could be, again, you could be right and really give away some profit or even lose a little bit with a market order to exit options. So what I do is I set up an alert. Everything's based on the stock chart, a price on the stock chart. I set up an alert, and if the stock chart hits a level, then I go place a limit order to get out of the option contract. And like in TradeStation, you can actually set up orders, option limit orders that are triggered by a stock price. So did that answer your question, Samson? If I get a chance, yeah, I'll try and show you. I may save that for the options course. I got to go refresh myself. I don't want to be clumsy and confuse people here. Yeah, you're enrolled, so you're good to go, man. Tom is saying the ES is oversold on the 5-minute chart. Are you looking at like stochastics or something, Tom? Yeah, I don't use them. You know, you get, they're actually, you know, I know people use stochastics and other stuff with success, but that's contradictory to the system that I'm using, that I'm really comfortable with, that I understand, that I've had success with. So I try not to, add indicators that contradict what I'm using and create confusion and stress. I'm a simple guy. Yeah. And again, I know people use them with success. I just, there's no end to the number of trading systems and indicators that you can use with success. The key is testing that. Getting a statistically valid sample of trades and demonstrating that not only the system works, but that you can trade it, because, trading is half technology or technical analysis and half psychology. So you got to have a system that will produce results, and you have to be able to use that system effectively. So I'm going to go ahead and take one contract off here, just to lock a small amount of profit in here and to lower my risk. So there, take one off. Now what's up with my stop here? That should be 2 contracts. Okay. Get it back in the right place. Good. We need another price bar like this one we got in on, don't we? So if we go 1 tick below here, this will technically have been a lower low, lower high. This is kind of a new low, but if we take this out, I'm going to move my stop down to here. This last resistance level. Yeah, Matt, there actually was a pyramid, this really small red pyramid here, but I traded based on the price pattern of this lower low, lower high, new low, rather than the pyramid. I didn't really, that was a really small pyramid, and it was right in this downtrend. So I wanted to see this down, up, and then we took this new low here. And we did use the owl and the PTF to confirm that. Surprised we didn't get a reversal bar. 1B or 2B. It's a pretty strong move up. Michael saying NYSE ticks hit plus 600. What does that mean, Michael? Is that a volume? Okay, Laura, thanks for joining. Glad you had fun. I enjoyed it too. Upticks versus downticks. Okay. So, Michael, if the ticks is plus 600, does that mean more upticks than down? Is that a bullish signal of some kind? Got it. Short term.
Bearish reversal bar entry now.
Oh, that's nice. Bearish reversal bar. Well, we're short. We like that. In fact, I'm going to move my stop one tick above that. because that could have been an intermediate, higher high. And if it does this and doesn't put in a new low and does this, that means that the trend may be changing and we want to get out. So we'll get out with a really small loss. So that's a good place for my stop to move to. It's more fun when the market just trends, and it just goes your way, but that's rarely the case. It's rarely the case just to tie into a trend and have it fall like a stock, like a stone or whatever. This is a more typical thing. It will try your patience and your discipline. Yes, Samson's asking if the art software speaks to me. Maybe you guys are hearing that. Like when that that 2B reversal R formed, there was a voice alert and a text alert that came up. And you get this mechanical voice saying, bearish reversal bar entry now. You can turn that on or off. I kind of like it. No, you're not hearing things. Yeah, it's a wrestling match, Michael. Bulls and the Bears. Somebody's going to win. I mean, we're down, for context, we're down 29, almost 30 points. So the Bears are winning for the day. It's just a question of the direction from here. Now we've got on the 8 range chart this bearish pyramid. That was just look. It's where I put my stop too. That'd be nice to see that get confirmed. Bob's saying the S&P 500 is only down 4 to 5% off its high. Yeah, but the year is young. I think we're going down 30-40% this year. Pavlos saying he followed the XIV. What's the XIV? Is that a ETF? VIX. VIX. Okay. I know the VIX. Inverse. Minus 500 ticks on the NYSE now. Okay. Tom, what's our stochastic saying? We oversold again or? Still oversold. Okay. You see how we got some support here? It's come down to this level on 3 price bars. So I'm gonna, if it doesn't blow through that in a minute, if it does, then we're on our way. If it bounces off and say we close this bar green, I'm gonna scale another one off. Yeah, see this this 1B reversal bar right off this level, three price bars. So if that's confirmed, if it goes one tick above, it'll be confirmed, and I'll take one more off. Just going to let it play out here a minute. As of this moment, this reversal bar is a potential. It won't be confirmed until we go one tick above. There, see it went away. Sweet. Now we got this pyramid confirmed over here on the 8 range. So we'll let it ride. Thanks for that note, George. To mute there for a minute to sneeze. So George is saying minus 800 plus 800 ticks show program selling buying. Some traders will exit long position if minus 800 tick. All right. You know me, George. I'm all about the chart, right? The chart I'm trading. But that might be an interesting backdrop kind of thing. That's a broad market indicator, right? Or data. That's the whole NYSE. So that might be interesting if I was trading like a SPY contract or something. Do they publish that tick indicator for an index, or is it just for the stock exchange? Do they have like a Dow tick or a S&P tick count thing? Okay. It's an indicator on a TOS, that's sink or swim, right, Michael? A lot of people using that. TOS is from TD Ameritrade, is it not? Is it a download like TradeStation? You know, it's an actual platform on your client, or is it a web-based system? I keep hearing about it. Either, okay. Oh, so we got a symbol in TradeStation for the tick count. Well, while we're watching this, the symbol is $TRAN. So here's the tick count on a 2-minute chart. Oh, because I got it on a range bar.
Push reversal bar entry now.
Yeah, I don't understand what this is. Traders arms. Yeah. Inverse of tick, okay. Okay, these are both 2 minutes. Let's get this back to a range. Okay. So we got a reversal bar. If that's confirmed, again, I'm going to scale this off, take one off on the 8 range. If it goes up one tick above. The audience is thinning. The diehards are still here. We started off with about 60 people in the room. We got 32 here. Yeah, let's do that. All right, one contract left. This is kind of a tough one. Oops. There we go. So if I get stopped out, that will be a $87 loss, and I've got a $94 profit booked already. So it'll basically be a break-even trade, which is actually, this isn't a bad place to be. I mean, we only got one contract on, but I'm in it for free, right? I can't lose. So now's where we just let it run. And if it drops 10 more points, you might say, Dean, you left a lot of profit on the table. And I would respond, I took a lot of risk off the table too. And who was it made a great quote earlier, right? I wonder if I can go find that. That was a great comment about capital preservation. I think it was Samson who said it.
Strategy reversal bar exit now.
I can't find it. There it is. There it is. Samson said it. You can't go broke conserving capital. That's awesome. Oh, you just typed it in while I was up looking for it. You can't go broke conserving capital. Yeah, George, I will check out the tick, and I'll go read about them too. I want to understand how to interpret them. Again, I think I would use that if I were trading the index itself. If I'm trading the individual stock that's, part of the mix, I'm not sure how that would help me. I'm always willing to learn something new, though. This is nice. This is going our way. And now you can see we don't have a pyramid formed. We must have been really close to getting one. here. But the criteria wasn't met. But you can see we got a really nice, lower low, lower high, lower low, lower high, making new lows. This is the last high, so I'm going to move my stop to there. Can't do it with a pin though. There's that, up one tick above it, there. Okay. So now even if I got stopped out, I'm in profit on this trade. Right? I've already booked 94 bucks. Stop out there is 25. That, my friends, is the catbird seat, where you're in a trade, and now the question is, how much am I going to make, not am I going to be profitable? And there's always a temptation just to close it, just book my profit. But the disciplined thing to do is let it run. All right? Let it run, let the market take us out. We won't catch the absolute bottom, but we won't exit too early either. All right? And I'm not bummed at all that I scaled out early and missed some profit on that, because it could have turned around and could have been a loss. So now we're rocking and rolling. Now the pressure's off. You have a live trading room. The last time we did this, I was profitable. We had 3 trades, 1 winner, 1 loser, 2 winners, right? So last thing I want to do is, it's no fun anyway to, lose money in front of a bunch of people, right? Your clients. But yeah, there are losers. There are losers. But we're doing good here. What are you trading, Bob?
Strategy. Bearish pyramid trading point entry. Now.
Bob's saying he's got a pretty nice profit for the day. UVXY. Oh, good for you. Good for you. Are you buying them outright, or are you doing it with options? What are you doing? Outright. There you go. Yeah, when it moves, doesn't it, brother? It swings. Look how that pyramid formed, and it's right where, you remember me saying, hey, I'm surprised there's not a pyramid there. So is the SVXY the inverse, Bob? I know the UVXY is the VIX long, right? I've traded the TVIX, which I think is the 3X, if I'm correct. If I remember correctly, the TVIX is like the 3X VIX, and that's wild, man. Yeah. SVXY, opposite 2X of UVXY. SPY testing the bottom. What time frame, Tom, are you looking at? Low of the day for the S&P. Is it? It's not for the futures contract. The low of the day is down. Down here at the open. Down here at the open. I know the Dow was down over 300. Isn't that pretty cool? The way we had this big gap open, and the way it retraced right into the Fibonacci zone, and then demonstrated a downtrend after that. We had to wait a long time to get that, but for me, that was the only legit trade, and it's working out for us. Guess you have to be a trading geek to think stuff like that's cool. So my coffee cup is empty. I'm gonna go on mute for a minute, walk down, fill up my cup, come back. If I'm live trading, I am a little hesitant to walk away, but it's my sim account, so if things go nuts, it's just monopoly money. But I'll be right back. Good time for a break if you wanted to. I'm back. Hey, thanks, Michael. Glad you could join us. Glad you enjoyed it. Well, we'll just let this, if this heads back down, we'll probably get another pyramid and a chance to move our stop. Or it could come up and stop us out. Oops. I meant to change the other window. Come on. I do know how to use this platform. This window, I want to look at the oil contract. There.
Bearish reversal bar entry now.
So we got a bearish reversal bar. I'm going to go ahead and trail my stop down one tick above that. That's a legitimate move. Oil might be interesting here. So we can definitely call this a 1, 2, 3. And a super nice, perfect 4. And it really looks like 5 is starting. We want to see a little pullback, and next up, we want to see the algo green. If it does, we've got a really nice target up here, up into here. Let's watch that one.
Bearish pyramid trading point exit now.
Look how oil, the owl went green and the PTF is green. Don't want to just jump in though. Chance you could miss a big run, but again, you got to have a set of rules, some structure to your trading, I think, to be consistent. You get lucky once in a while. We can take a look. Our range chart. I think we want 0.8. I think that's how you set it for oil. No, that ain't right. Yeah, that's right. That's an 8 range chart for oil. Hey, George, you watching this oil setup? Do you like it? Oh, you already in it. I'm still waiting. I might be in here in a minute, though. In fact, let's be ready.
Strategy. Bearish pyramid trading point entry now.
We're not sure where our stop will be yet, but the entry's one tick above this high here for oil. Oh, look at ES. Rock and roll, baby. Drop like a stone. Remember I said that this purple line was a previous support level. Even if we go under here, see, it's right at it. It's maybe kind of key. So here's what I'm going to do. If we reverse off of this, if we get a pretty big green bar, or if we get a reversal bar, you know, a 2B, 1B, I'm going to close it there. If we blow through it, then we're going to stay with it. Moment of truth. Look at that. See, if I was trading 10 contracts on the E-mini, I'd still have a lot left. I'd still have 3 or 4 on. Huh?
Bullish reversal bar entry now.
So this is a tough spot to be in on this ES trade. Samson, that would require, yeah, if you're going to trade 10 ES contracts, right, you better have a pretty big account. Yeah, because I stick to the 2% rule, right? So, you know, to trade 10 contracts, right, even with like a 10 tick stop, what would that be, right? 10 tick stop at $100 a tick, $1,000 a contract, so it'd be $10,000 loss. 10,000 is 2% of what? 200K? My math right there? So this is a tough spot to be in on this ES trade. So it's moved straight down, and we're in some really nice profit. You know, on this one contract, we got about $438 profit. Now the legitimate stop is up here above this pyramid. But do I really want to let, you know, a $400 profit turn into a $100 profit? You know, I've scaled twice already, and the answer for me is no. No, I don't. Right? Will it keep going down? Will it reverse? Tough call. I know Bennett would say, stay with it, stay with it, stay with it. Right? And that's probably good advice. And we got the session low down here. So we had this 1B reversal here, which got taken out. But what I'm going to trail my stop down to there. One tick above that, right there. I think that's a good kind of compromise right there. So that's a 325, right? So if I get stopped out there, even if it continues down, I'm happy with the trade. I got no problems with it. I got a little bit of room, so if it keeps going, I'm still with it. Does that seem legitimate to everybody? Samson, 10,000 is 2% of 500K. Yeah, you're right. So, yeah, if you happen to have a $500,000 futures trading account, then by all means, trade 10 contracts. You know, not all stops are 10 ticks, but that's how the math works, right? Still watching this oil thing. This could pop for us. But just like, you know, how long did it take us to get this ES entry, right? It took us, 2 hours, right? What, we got our entry at just before 9 o'clock, and we got on here at 6. It's kind of like fishing, right? For those who are patient. And there certainly are other shorter term scalping techniques that people use. I know some traders who are only looking for a couple ticks of profit, and they take. Man, I was on the Timing Research show. It's a panel of folks who give their projections for the market. One guy, I know he has an automated trading system, and he's only looking for 1 or 2 ticks. He places 1 to 200 trades per day on the ES. His broker loves him. We just got a red PTF on the ES. That's good news. So Samson, if we win that Powerball, then we can come trade with 50 or 100 contracts on the ES, right? Or maybe if you won the Powerball, you'd, yeah, I'd still come trade. It's fun. Trading's fun. It's like playing chess with some of the smartest people on the planet. Yeah, John, good question. So John's saying, hey, Dean, I looked at your historical data for 2015. I believe I saw a few trades that were in the 30K range. On a 100K account, how does that fit the 2% trade limit? Yeah, so the 2%, John, is the potential loss. It's the distance between the entry and the stop divided into $2,000 for a 100K account. It's not the position size, okay? It's how much you could lose on the trade. We never want to lose more than 2% on a trade. Does that clear it up, John? I'm glad you were looking at the website. That's cool. Try and be fully transparent. Show the actual trades I'm taking them in my own account. So not that I was recommending anybody take this full, my disclaimer repeat, right? Showing these trades for educational purposes. But did anybody take the ES trade of their own volition? Are you smiling, George? Well, I was calling it out, buddy. The seal says he got an Apple put. I can't chide you for not following my trade, George, because I'm saying uh, I'm not telling you what to do. I'm showing you what I'm doing, right? But this is a good one.
Strategy reversal bar entry now.
You're not stupid, George. You're not stupid. You just you just don't trust your system. Yeah, this one's working out. I had said maybe a half hour ago, back when we were in this chop here, yeah, they don't always trend real hard, right? Well, now it is. This is fun, huh? Now it's the same dilemma. Where do you trail your stop to? You got $600 profit on this one contract. And at some point, we got to figure out where we're going to trail to. I think we just took out the low for the day. Look at that. The Dow's down over 300 again. Yes, sir. So this line doesn't mean anything anymore. There's the low for the day. We just blew through it. How low can she go? Man. Well, it's always fun to get a winner like this, and it's even more fun to do it in front of people. Now look how long this move down has been. Pretty much uninterrupted for 12 points. You know, at some point it's going to even correct, even if it's going to go on down more, right? And you know, we've been on this call for 4 hours. Wow. So I'm going to trail my stop pretty tight here. This oil thing's not playing out yet. I did get a reversal here. This is going to be a big pyramid. So Al almost went negative here. I'm gonna go ahead and scrub this one for now. I don't think we're going to get in that anytime soon. So what do we do with this? Still saying stocks are manipulated and too overpriced. Well, I think you know, I don't really, you know, look at overpriced or underpriced. You know, I'm not really a fundamental guy, um, but I do look at the patterns, and I see a very clear bear pattern forming on the indexes on both the S&P 500 and the Dow. You know, I've been talking about that in my weekly updates. You know, I publish a weekly newsletter. I do a video on YouTube where I go over the charts and give my forecast and update on the market. Again, you can subscribe to that newsletter. It's free. In fact, I'll put that in the chat window again if you want to go. If you're interested in the newsletter, check it out. Just go to, oops, don't click on that one, typo. There, go to the home page. Right on the front of the home page, there's a place to sign up for the newsletter and give my market analysis. And of course, I posted earlier, if you look in the chat window, my stock pick subscriptions, if you're interested in that. We're in some awesome short trades right now, making some nice returns. Well, I want to end this call before too long. We're on longer than I really expected to be, so I'm going to trail this down. I'm right above, one tick above this last bullish reversal right here. If we get stopped out, we'll wrap it up. If it keeps going down, we'll keep watching it. That's a pretty tight stop, and it's, you know, it's going to reverse up pretty soon at some point. Even if it's going to go make new lows, you know, things don't move in straight lines for too long. So the E-mini is down 2.14%, 15%. It's a pretty strong day. Lucille, email me an old Olympia beer. You know, they still make that. The brewery is closed. The Olympia Brewery has been closed since, I think, 2004. It's been a long time. Miller, who's owned by a South African company, bought it, decided to close it. But the brewing rights, the brand, somebody else bought, somebody in Texas, and they brew under that Olympia label still. It was never that great. I don't know why they, you know, Olympia beer was never a premium microbrew kind of thing. Somebody just bought the brewery. It's been sitting empty for 10 years. Somebody just bought it, and they're talking about making it into microbrews and, you know, micro distilleries and restaurants and condos. That'd be kind of cool. If you've ever been in this area and you've driven I-5 and you've seen the old Olympia Brewery, it's kind of a cool historic property. This thing just won't quit. Oh, you used to work in Lacey. Okay. Where are you at now, Vasil? I don't know if I'm saying your name right. Vasily or Vasil? South Seattle. Okay. I'm in Olympia. You must know that because you talked about Olympia Beer. So that's where the Rainier Brewery used to be. That's like a coffee deal now or something. Bob's asking where I see crude. What's my theory on crude? Yeah, no bottom in sight, Bob. I mean, we got maybe a short-term, retracement set up here on this small time frame, but there's no bottom in sight. It is still uh, in a wave three, an Elliott wave three, since early last summer. So there'll be a retracement at some point, but with Iran's oil coming online and adding more volume into an oversupply situation. The only thing that might take prices up is the political tension in the Middle East right now between Iran and Saudi Arabia and stuff. And now the U.S. is exporting oil for the first time. They just first tanker of oil left Texas, and that's since the energy crisis of the 70s when the Congress passed a law that we couldn't export any oil. First time since the 70s we just shipped a tanker of oil somewhere into a heavily oversupplied market. Look at this thing. Are we having fun yet? Yeah, that's a little bit unusual, Samson. Like you said, 850 bucks on one contract. Um, it's fun though. I'm going to go ahead and take these fib lines off. We don't need those anymore.
Bullish reversal bar entry now.
All right, so we got a bullish reversal bar on the ES. I got other stuff to do. I need to wrap this call up here. So let's, we're gonna get stopped out. I'm just gonna trail it down here. Not that, the order.
Bullish reversal bar entry now. Order filled.
All right, there we got stopped out. I got no problem with that. So we made 880 bucks on a 3-contract trade. It took just over an hour and a half. So again, yeah, that was more for teaching. Yeah, thank you, Larry, Bob, Tom. I'm going to go ahead and wrap it up here. If you have any last minute questions, I'll hang out for a minute. But otherwise, that's it. Not going to make any more trades. That oil trade, if you're watching that, if it gets above this level here, 33.89, that might be a good entry. It stops way down here though. It's kind of a problem. So anyway, hey, thanks you all for showing up, for hanging out. This was fun for me. There was a great engagement, so I'm sure I'll be doing it again, a couple times a month anyway on really interesting days like this. So trade well, always use risk control, and we'll see you guys later. Thanks.
Bearish reversal